Hello there, everyone. My name is Kaya Deoni, and I'm going to be your tax lecturer. This particular series is called Basis Period in the Nigerian Tax System. And this series is important and relevant for students writing the ICAN exams or students writing the CITN exams. So we're going to be kickstarting with Basis Period. Of course, you know that basis period is a fundamental topic that is necessary for understanding all other computations in the tax system or in the other topics that we are going to be learning in the future. Basis period is quite similar to accounting period. For example, if you have looked at a company's financial statement before, you would understand that companies prepare the financial statements using accounting accounting period. So for example, if I pick up a company's financial statement and the company's financial statement says that the financial statement has been prepared as at 31st December uh, 2022, for example, what this means is that the financial statement is going to cover a period of 12 months. And the period of 12 months is going to be from 1st of January 2022 to 31st of December 2022. So typical financial statement is going to cover a period of 12 months. Okay. Now, it's not all companies that make use of 31st of December as their financial year end. Certain companies or there are other companies that could be using September, October. So it's also important for you to understand that if a company is using October, for an example, as its financial year end, that its basis period is not going to, or the accounting period of that company is not going to start from January, but it's going to start from a period that is 12 months backward. So, for example, if a company uses 31st October as its financial year end, and the company has prepared its financial statement. So let's say 31st October 2022 is the company's financial year end, and you want to determine the accounting period of that company. Okay, so the accounting period of that company is going to be 1st of November 2021 to 31st of October 2022. In this way, you would have a 12-month period, all inclusive. So November to October. So this is in the financial world what we call accounting period. However, in tax, we have what we call basis period. And basis period is very similar to what we refer to as accounting period. While in financials, we call it accounting period. In tax system, we call it basis period. And basis period is that period that determines how or what and the amount at which our tax is going to be. So typically in the tax system, we have two types of basis period. We have um, the abnormal basis and we have the normal basis. Okay, I don't know if this is still relevant, but it's just important that we mention it. So the abnormal basis are typical periods in which when you add them up together, they are not up to 12 months or they are more than 12 months. So we call it abnormal basis period. But the normal basis period are usually or always a 12-month period. Okay, they are always a 12-month period. Now, so we already know the difference between abnormal basis period and the normal basis period. So now it's also important that we also know that there are two other methods or two other types of basis period. Basically, we have what we call the preceding year basis, and what we also refer to as the actual year basis, the actual year basis. So we need to understand the difference between these two. What do they represent? So starting with preceding year basis. Now, in tax system, there's what we refer to as tax year. Okay. So tax year is basically the year in which the tax you are paying is due, or the year you are expected to pay the tax. So we have what we call tax year. In some textbooks, they also call it year of assessment. Year of assessment. So in short, we can call it YOA. YOA. So your tax year or your preceding year basis, if you're computing on a preceding year basis or actual year basis, this will determine when your tax year or your year of assessment is. So I will just be using either the tax year or the year of assessment going forward. So let's just choose the tax year for now, or I could just interchangeably change it to YOA, that is the year of assessment. So preceding year basis means that the tax year is going to be a year after the basis period, right? A year after the end of a basis period. So what that means is that, take for example, I have a company's basis period to be. So let's delete this actual year basis first, since we are focusing on preceding year basis. So if I have this company's basis period, let me bring it down here and say this is the basis period of this company. It typically runs from 1st of January 2022 to 31st of December 2022. So I want to determine the tax year of that company on a preceding year basis. Okay. So if I want to determine it on a preceding year basis, all I need to look at is what is the last year end. Okay. What is the last year end year, which is 2022. So the tax year on a preceding year basis is going to be 2023. Okay. So it typically means that the tax for this 2022, the tax year belongs to 2023 financial statement. If I have, if I change this to 2024, right? Assuming that I change this to 2024, now the tax year would also need to change to 2025. Okay, so so when you're determining the basis period or the tax year on a preceding year basis, it is usually um, a year after. It is usually a year after. So again, if I change this to 2026, right? So this ends in 2026. The tax year is going to be 2027. For the purpose of exam, it doesn't even matter. Let's take this basis period downwards here. Say basis period starts from 1st of November 2021 and ends 31st of October 2022, a 12-month period. On a preceding year basis, the tax year is going to be 2023. So all you just need to look at is the last date here that ends in 2022, then the tax year is going to be a year after. Examples of taxes that are prepared on a preceding year basis includes the company income tax. Okay, that's an example of that. So let's move back to actual year basis. Okay, if I'm going to be determining the tax year, assuming that I'm using actual year basis. Okay. Actual year basis is pretty straightforward. The tax year is the same thing as the year under review. So if I have a basis period that's starting from 1st of January 2026 to 31st of December 2026, the tax year is going to be the same year. So this is going to be 2026. Okay. So usually, actual year basis runs from January to December. When a company is being assessed to tax on an actual year basis, it usually runs from January to December. Okay. There are few cases in which it may not necessarily be January to December. For example, the company ceases operation before December. So because there is no December data, say the company ceases operation in September, 30th of September, and you are using actual year basis. In that case, it's going to be from January to September. Or let's say that the company did not commence operation in January. Say a company commenced operation in April and you are assessed on an actual year basis. So it's going to be from April to December. But if it is not a case of commencement or cessation, actual year basis are always from January to December. And in that case, the tax year will be the same year of the as the basis period. Okay. So I hope it's quite clear on how to differentiate between actual year basis and preceding year basis. Okay. An example of taxes that we assess on actual year basis is the personal income tax, or taxation of an employee, right, of employment income. Actual year basis can also be written in short as AYB, while preceding year basis can also be written in short as QIB. Just get used to these acronyms because we're going to be using them more often. So, what basis period helps to do basically is that it helps to solve the issues of uh, commencement and some other problems. So, basis period can be used to solve three main problems: the problem of commencement, if your company is just starting operation, the problem of cessation, and the problem of change in accounting dates. Problem of change in accounting dates. All right, so these three problems can be solved with the help of basis period. And to solve them, the law has given us three different rules that will solve each of these problems. So for commencement, we have the commencement rule to solve that. For cessation, we have the cessation rule to solve that. And for change in accounting dates, we have the change in accounting dates rule to solve that. All right. So now for commencement and cessation, um, there is an old law that we use in solving them before the introduction of Finance Act 2019. So Finance Act 2019 has changed the modalities or the method upon which we solve commencement rule and cessation rule. Okay. But for change in accounting dates, this is not impacted by the Finance Act. So, going forward, we start this particular series is to solve question or to explain to us how to solve the commencement rule. Okay, so but for you to appreciate what the Finance Act, the new law, which is the Finance Act 2019, has done, we are going to be exploring the questions under the old law, and then when we understand how the old law treats it, we'll then move on to the new law, which is the Finance Act. Okay. So starting with the old law. Commencement rule typically applies to companies that are just starting up operation. Okay, so you want to determine what is the tax implication of just starting up a company, right? Or you want to choose the most feasible date or the best date for you to start your operation. So you can apply the commencement rule. Like I said earlier on, let's start with the old law. So how is it going to be, or how do I approach basis period under the old law, right? Now, it is important to let you know that Finance Act 2019 took effect in February 2020. Okay, Finance Act 2019 took effect in February 2020. So the Finance Act starts applying to companies that started operation in 2020. Okay, in 2020, that is when we use the Finance Act. But before that, prior to that, any company that starts operation before 2020 would need to apply the old law. So for exam,